Welcome back to the Daily Crypto Roundup. Today we're going to look at why the market has continued to push higher, what's actually behind the strength rather than just the headlines, how regulation is creeping back into the narrative in a meaningful way, and why certain assets are reacting more sharply than others. We'll also touch on the broader macro backdrop, how institutions appear to be positioning, and what analysts are saying about whether this move has legs or whether caution is still warranted. Before we get into today's stories, it's worth saying this out loud. In putting together this episode, we took a look at what a lot of other crypto shows are leading with right now, and it's the same pattern over and over again. One day, Bitcoin is supposedly going to $150,000. The next day, it's crashing to $50,000, and then the cycle just repeats. That's not what this show is about, and it never will be. We're here to give you accurate information, proper context, and a clear picture of what's actually happening, not to whip up emotion for clicks. We'll share our opinion when it's genuinely useful. We'll explain how we're thinking about the market, but ultimately we'll always leave the final judgment to you. If sticking to that approach means fewer listens at times, then so be it. We'd rather build trust over time than chase attention with headlines we don't believe in. Before we get into the numbers, a quick reminder that the XRP giveaway is still running. Leave your comments on the episode, let us know what you're watching, and we'll be picking winners directly from the comments. Alright, let's start with where the market is trading right now. As the market continues to build on its early year momentum, Bitcoin is trading around $90,600, holding firm near key psychological levels. Ethereum is sitting close to $3,160, continuing to move in step with the broader market. Binance Coin is around $895, while XRP is trading near $2.08. Solana is holding around $134, with Tron near 29 cents and Cardano around 40 cents. Further down the list, Dogecoin is trading near 15 cents, Chainlink is close to $13.20, and Polkadot sits at $2.16. Overall, this price action reflects a market that's stabilizing with strength, rather than spiking on thin liquidity. With those levels in mind, let's get into what's actually driving today's stories. The dominant theme running through the market today is participation. Over the holiday period, volumes were thin, liquidity was light, and price moves often felt exaggerated. What we're seeing now is different. Buying is more consistent, pullbacks are shallower, and price action is holding rather than immediately fading. Bitcoin's behavior near the $90,000 level is a good example of this. Rather than seeing sharp rejections, the market has absorbed selling pressure and continued to build a base. Analysts often point out that how price behaves at key levels matters more than the level itself. And right now, behavior looks constructive rather than fragile. Ethereum has followed a similar path, holding above $3,000 as network activity picks up compared with late December. This suggests that users and developers are returning after the holidays, supporting price action with fundamentals rather than speculation alone. Another thing worth noting was that Bitcoin prices were largely unmoved by the U.S. military action in Venezuela, where reports emerged of President Nicolas Maduro's capture over the weekend. Despite heightened geopolitical risk and broader market uncertainty, BTC held near key levels around $90,000 to $91,000. Showing resilience while traditional markets are set to reopen. Analysts note that the crypto market's lack of reaction suggests traders are treating the news as a non-factor for digital assets in the short term, though some warn volatility could still arrive once wider financial markets resume trading. Before we get to the next big stories, we are going to pause here for a quick word from our sponsors. Stay with us. One of the key stories shaping sentiment today comes out of Washington, where discussion around a new U.S. Senate crypto bill is beginning to influence how analysts think about regulation-sensitive assets. Reporting from FX Empire highlights that the proposed legislation is not about price targets, but about market structure clarity, specifically how digital assets are classified, overseen, and regulated in the United States. Analysts argue that clearer rules could meaningfully change valuation assumptions for assets that have historically traded at a discount due to regulatory uncertainty. That context is why renewed talk of a possible move toward the $3 level has re-emerged in some forecasts. Importantly, This is being framed as a conditional scenario rather than a near-term guarantee. Markets are reacting not to confirmed outcomes, but to shifting expectations, with traders reassessing how much regulatory risk still needs to be priced in if legislative progress continues through 2026. Alongside that regulatory backdrop, XRP has risen roughly 9% as the broader New Year rally takes shape. Analysis from Eudaimonia & Co. suggests this move reflects improving participation rather than speculative excess. Rather than sharp vertical moves, price action has remained relatively controlled, with the market consolidating after recent gains. Analysts note that key technical levels are now coming into focus as the asset continues to trade within a developing range. The absence of forced liquidations or extreme leverage is notable, pointing to steady repositioning rather than momentum chasing. At the same time, caution remains warranted. Early January rallies have historically been prone to reversals once full liquidity returns, and the next few sessions will be important in determining whether this strength evolves into a sustained trend or fades as positioning settles. It's also been reported today, in a significant policy shift, Ghana's parliament passed legislation legalizing cryptocurrencies, aiming to foster innovation and education across the economy. The new law simplifies the regulatory environment for digital asset projects and paves the way for initiatives like Bitcoin Dua, which focuses on community awareness and practical use of BTC in everyday financial activities. The move positions Ghana as one of the more progressive African nations embracing digital finance, potentially accelerating crypto adoption in emerging markets. Away from price action, today's news cycle has also been shaped by developments in security and infrastructure. Blockchain analysts and on-chain data from CryptoQuant flagged a coordinated EVM wallet attack that drained around $7 million, underscoring that security risks remain a persistent challenge as adoption grows. While the scale of the breach is relatively modest compared with some historic exploits, analysts point out that repeated incidents still influence user confidence and capital allocation, particularly within decentralized ecosystems. At the same time, the incident has drawn attention to rising interest in AI-driven security solutions, with projects such as DeepSnitch AI seeing strong pre-sale demand, as traders look toward more advanced threat detection and defensive tools. Together, these developments highlight a familiar dual narrative in crypto: ongoing vulnerabilities on one hand, and rapid innovation on the other. For the market, the takeaway is not panic, but realism. Growth brings opportunity, but it also demands stronger infrastructure as the ecosystem matures. And it is probably a good time to approach this next point. We have now logged a long run of green days across the market, which historically is never sustainable indefinitely. Markets move in cycles, and even in the strongest bull trends, pauses and pullbacks are not only normal, but necessary to reset funding rates, shake out late leverage, and rebuild healthy structure. A correction at some point soon would not invalidate the broader bullish thesis, it would reinforce it. This phase is about patience and discipline rather than chasing every candle. Strong hands understand that temporary downside is part of long-term upside, and as long as key higher timeframe levels hold, the bigger picture remains intact. Volatility is the price of admission in crypto, and those who keep their conviction during these moments are typically the ones rewarded when momentum resumes. With this being the first proper trading week back after the holiday lull, activity is likely to pick up quickly as institutional desks, market makers, and US traders return in size. Historically, this re-entry phase brings higher volatility rather than clean direction, as positioning is reset and macro narratives are repriced. The most probable outcome early in the week is choppy price action, with sharp intraday moves designed to test conviction on both sides before any sustained trend develops. If Bitcoin holds key support during this period, it strengthens the case for continuation later in the month. If not, a controlled pullback would be a healthy way to clear excess optimism. Either way, this week is less about immediate upside and more about information: who is buying, who is distributing, and whether demand shows up when real liquidity returns. That's it for today's Daily Crypto Roundup. Don't forget to leave your comment for the XRP giveaway, hit follow if you're new, and consider leaving a 5-star rating if you're enjoying the show. We'll be back tomorrow with the next update as the market continues to find its footing in the new year. And as always, we will see you at the top.